Okay, hello everybody, and welcome back to another video from the Investor Diary. Now, we talked about my journey on how to become a successful Forex trader, and I'm not successful yet, on my way. So this is why it is how to become. On that, there are two pillars to what is a solid Forex trading plan. So we have two conditions to become a successful Forex trader: the forex trading plan and the personal money management, and the money management system is part of risk management. I thought today that I'm done with risk management and I'm going to start with uh, talking about the forex trading plan that I'm using now, which I learned from someone on YouTube. And actually, I'm surprised that I'm saying that because I looked through many YouTube videos, as many of you have done, and I couldn't find anything that is suitable. But for some reason, this guy, he seemed to have made a meticulous research on a system that he found, and he's trading on it. So when the time comes, I will refer you to that person, to his YouTube channel, and to watch his series on explaining the way his system works. And this is what I'm following. Of course, as I mentioned in this article, that I'm not following his system to the letter. I have done many modifications to make it my own, and this is very important to make your forex trading plan yours, and it's part of how you make it solid and speaks to you and to your lifestyle. Now, today we are going to talk about how the money management system rules my forex trading decisions. Something happened today in one of the trades, and I wanted to show you that how my money management system made me not take that trade. And let's move to that example. It is on the GBPCHF and it's on the 1 hour. See, this is the trade. Now, just to give you a short description, this is the trading range, and I should be looking for unmitigated order flows at the beginning. And because of the structure of this chart, the unmitigated order flow, for example, this could be one of them, but it's too far away from this point, which is the high end. Now, okay, this is the trading range and it's going down. Therefore, we will be taking short positions. Okay, saying that the once it we recognize the low of the trading range and the inducement is hit, this is when we decide, or when we recognize the low of the range. And then we go up again and we start to look for areas where the price will go up and reflect going back down into its main course, which is downward trending. So the two things that I'm looking at, this is something that I should delete. It is an old note. Order flows, but the order flows, as you can see, they are mitigated by this area. Even the order blocks are mitigated here. This is an order flow that can be taken, but it is far away from the high end of the range, and I usually uh, put my stop loss here. Okay, but in this case I just wanted to see if there is any chance to take this trade. So one, the SL is too far. Let's look at the size of this stop loss. Okay, the size of the stop loss is, it's 45.9 pips. Okay, and if we go to the GBP CHF, and I put 45.9, as the distance, and this is my current balance from 1000. Actually, this testing on the demo, I started from 923. 923 was on my account. So now it's 974. Actually, it's now 963, but this happened after I finished trading today. And my starting risk is 0.5%. So let's see. So it's not even 1 micro, it's less than 1 micro. And let's say I want to increase my risk, and because I have a range, as I mentioned in previous videos, from 0.5% to 1%. Let's say I'm going to put it at 7.7%. No, still, well, it's 1 now, so I can 6. This is the process. I'm showing you the process, exactly what I would be doing when I'm trading. So it's 5.9. No. Okay, 5.9. Yeah. So this would be the risk about 0.6%, but I am meticulous, as I said before, and I use this range. I would be risking 5.8. But let's say, okay, I found out the risk that I want to take, but if we go back to the trade itself, we find out that it is less than 2, the RRR. It's 1.82. Sorry, 89. So it's less than 2. I tried to, I mean, this is why I made the stop loss here just at the end. Usually I would go up against the teachings of that guy, because that guy puts his limit, his stop loss exactly at the high end of the range. For me, I understood from him that this is an external liquidity of the range. So since it is a liquidity, then the price could actually go above it. Although it will, that would mean starting a new range, but for the open trade, I want to give it a chance still. But let's say I will follow his rule, I would still be at 1 point less than 2. It's at 1.8, 108, 59.1. Exactly. See, it's on the same, it's on the same level. So it's 1.92. Okay, and this is it on the same one, 7271. No, it's not. Okay, 1.91. It's not worth it. So when we decide on a trade, we need to do this. We need to measure it against our own money management system, and we need to be very disciplined about it. If it does not agree with those rules that we have put for ourselves, then we shouldn't take that trade. And this is one example how my money management system, which is part of my risk management, it plays a crucial role in my psychology during an open trade. Let's say this trade opened and I said, okay, I will take it. It's close to 2. This 0.09, it will not affect. And I took it and it lost. I will say, well, why did I take it? Because it's not worth it. And I just lost the amount. And even if it won, it will not cover, it will cover only one trade or one trade and something. So, yeah. So this is what I wanted to show you, how money management, to be strict about it, will save your account. And I will show you the results of this. Let's say, okay, and let's filter it. And I will show you now there are, I mean, part of risk management is the total exposure. And I will show you that now. Let's take this and okay, let me tell you. The ones in red are the trades that lost. The ones in yellow, that means it's still going. The white, it is still pending. And the green, that means it closed and it was a profit. Okay. So let's say filter by fill color yellow. Okay. And those are the open trades now. So they are 1, 2, 3, 4, 5, 6, 7. 7 open trades. So look at this one. This was pending since 18th of August, for example, and it opened on the 5th of September. So this is the opening day of the trade. And I said before, I use pending orders. So let's see the risk. Now, this is the time when I started actually putting a range. The ones before, the empty ones, those were 0.5% only, strictly 0.5%. I would actually go below. For example, if it was, if that calculator, for example, said, if that calculator said it's 0.18, I would go for 1. That means I will be, my risk will be much lower than 0.5%. This is the system that I used to use before, but this made my trades not valuable really, and the growth of the account was very slow. So I changed it, and now I can go above 0.5%. Okay, and I will. So that my total exposure also is a range. It's between. It's not. No, it's not a range per se. The magical number for me for the total exposure of all open trades is 3%. But I can tolerate up to 6%. And this is something I'm testing the system. When I first started, I only had 3 open trades. Since yesterday, I started seeing 6 open trades and 7 open trades. Okay, and in the future days, I will see if there will be more. And accordingly, I will play with my risk percentage that I can tolerate, so it can accommodate the maximum total number of open trades possible. So let's say that these are all 0.5%. Okay. This means that the total exposure is 3.63%, and that's acceptable for me. It's around the 3%, okay, and it's way lower than the 6%. My acceptable range is 3 to 5%. My maximum tolerance is 6%. This is my money management system. Okay, so, and this is how I dictate those rules on my trading. Let me show you the final thing. I will delete those. The ones in gray are the ones that got deleted. So they were pending, but it didn't, the trade range changed and they were not triggered. So I delete those pending orders. Okay, let's look. This is the RRR. Okay, this is when I started. See, this is 0.5% out of calculation. It's not because I left it. No, this is out of calculation. These are the numbers. So this is the maximum. They're all around the half percent, but there is a couple. This one is on the 7.6. This one is 8.5. Okay, only 2 that are going way above, nearing to the 1%, but I don't have any on the 1%. So this can actually, imagine if I have a rule as the academia of risk management says, between 1 to 2%. And let's say I took the minimum of that 1%. That means I can, If I want my magical number, it's 3 trades. With the 7 trades that I have, it's against my rule of 6%. It becomes 7% my exposure. So this is something I'm enjoying. It's playing well with the psychology, how I can handle trades. Even if all trades lost, I'm fine. My exposure is from $1,000 about what, 35, 37 dollars, and that's fine. I can still be in the game and I can regain those losses. Okay, so this is it, and see you hopefully in the next video. I am excited actually to start talking about my trading plan. Because of this excitement, I'm actually putting parts of that, and I'm explaining parts of that in the risk management when I'm showing such examples. But I'm hoping that in the next video, I will start documenting my own trading system. Let's see how it goes. Okay, see you in the next video. Bye bye.